Hi everyone, thank you for joining us today. To introduce myself, I'm Stuart MacDiarmid, I'm the Associate Sales Director in Birmingham. I'm here with my colleague James Capper. If you'd like to perhaps introduce yourself, James.
Thank you, I'm James, I'm the Head of Compliance Property Services in Building and Estate Management for Centric.
Fantastic. So the idea today is just to discuss some of the latest topics and certainly changes in legislation that's been led by a document that's released by the government on the 21st of July, certainly in terms of surrounding cladding and the EWS1 reports. I just wanted to ask you, James, obviously in terms of that report that's come out, what impact that's going to have on the estate management side of our business and indirectly with yourself.
Okay, so the guidance that came out was billed as a major intervention by the government, and it was in response to excessive requests for EWS1 forms on buildings where they were considered not to be appropriate. So the EWS1 form was originally designed for buildings over 18 metres. There was a consolidated advice note in January of 2020 that brought all buildings below 18 metres into that scope as well. And what we saw there was a knock-on effect and a knee-jerk reaction from insurers and lenders that they were requesting an EWS1 where it wasn't appropriate, and that led then to the stalling of a number of sales on leasehold apartments where they couldn't get an EWS1 or one wasn't relevant, but the lender was still requesting that. So the announcement this week is that there is no longer a requirement for an EWS1 for any building below 18 metres, but that brings with it a number of other issues in terms of building safety and how the lenders are going to react to that information.
Yeah, absolutely. I mean, I think when I looked at the report and certainly looking through it, my initial reaction was fantastic. We're going to be in a situation where the market's going to completely explode with people wanting to come to the market following the restrictions of the EWS1s. Where do you feel the correlation between the EWS1s that have been generally asked for by most people now when they're wanting to put the property on the market and what the UK lenders are actually asking for? What do you think the difference is going to be to the general public?
So there's a number of buildings that will still have medium or even high risk, regardless of their height. So there are certain aspects of building management and the new Fire Safety Act that will require us to establish what the external wall system is made up of. And those, whether they're under 18 metres or not, may still highlight some defects. And we anticipate that the lenders are still going to want to be aware of those and any potential costs associated. So the main benefit from this week's announcement is those almost frivolous requests for an EWS1. They're no longer going to be held up because the lender will be advised. I think there's 80% of lenders on board at the moment. But the lender will be advised an EWS1 is not required. They may still have some additional queries on the external wall system. From a building and estate management point of view, we are generally led by our risk assessments. And if there is a particular risk posed or uncertainty there, we would look to carry out a survey and establish the makeup of that wall system. So it's not a get out of jail free card for any building under 18 metres. There will still be remedial works required. And Centric, certainly on our own portfolio, we're managing those, awaiting some updates on potential funding, dealing with warranty claims, and obviously those over 18 metres, we're progressing with the Building Safety Fund. So as it stands, it's great news for those that haven't had a survey, no known issues, and they will not need an EWS1, but we anticipate something will come down the line in terms of risk guidance, and that will probably be almost equivalent, which lenders will be asking for. So in the meantime, our pre-sales and pre-contract inquiries team will be handling these kind of inquiries as they normally would, as a potential, there is a potential cost to the incoming buyer, and that then would be negotiated with solicitors where costs are known.
Yeah, fantastic. I think one of the things that I've personally found from the sales market is I suppose the understanding of what actually EWS1 is for. And obviously we had a conversation the other day about that EWS1 form, and it's actually just a form specifically for the lender. It's not actually in relation to the building itself and everything that's about it. There's a lot that goes into fire risk assessing a building, isn't it? It's not just about the external elements of the building. If there is no requirement for an EWS1, but obviously there's going to be some conversation surrounding the fire risk assessments of a building. How will a leaseholder get hold of that information if it's requested by their agent or by a bank or building society?
So the Fire Safety Bill, which became the Fire Safety Act at the end of April 21, that places a requirement on the duty holder. Mm-hmm. So in most cases, the managing agent or the freeholder, to establish that the makeup of the external wall system is safe. And it also brought with it other measures, including fire doors and some other stuff that we need to pick up as the duty holders. The announcement to remove EWS1 doesn't have any bearing on that. The law still requires us to establish the makeup, and we're heading towards this golden thread of information for all buildings, where we'll be able to say to a lender, okay, we may have combustibles on part of a building, but that's mitigated by various fire safety measures. So it's almost as though this introduction will give us more of a holistic approach to fire safety. Mm-hmm. At the moment, what we had found with the EWS1s, a very cautious, almost worst case scenario approach, where fire engineers and cladding surveyors wouldn't sign a building off if they weren't sure 100% that it was safe. This review should really get to a point where they're reviewing the risk and not excessively marking down, if you like. They will still typically look at the worst case scenario, but in some of these cases we've had EWS1 requests on 3-story buildings that are completely masonry, and those sales have stalled because of that.
Absolutely.
But it's important to note that the EWS1 has never been a fire safety certificate. It is purely for the valuer to be able to put a value on that property and say whether or not there is any potential remedial works.
Got you. Okay. And in terms of obviously the terminology of 18 metres, I mean, in terms of a building, what do you think 18 metres would look like to the general public to give them some information to be able to look at their own building? So
18 metres is typically 5 stories and above.
Okay.
In terms of the Building Safety Fund, which some leaseholders may benefit from, their 18 metres was to the to the slab level of the top habitable floor. Mm-hmm. So they don't include the entire height of the building. It's to the slab level on that top floor. Mm-hmm. So there are some that narrowly missed out there on funding. Your top habitable floor might have been, I think they had an allowance for about 17.2 metres, I think. But then there's an argument there for, is a building safe just because it's 1 metre less than 18 metres?
Yeah, of course.
And 18 metres overall came from typically fire brigades were historically able to access 18 metres from ladders, and above that was a higher risk. So there isn't really any particular methodology to the 18 metre rule. It was based on this kind of almost archaic fire brigade strategy previously.
Yeah, of course.
In terms of leaseholders themselves, those that are 6 stories and above almost certainly should have had their agents now already registered them for that Building Safety Fund, in anticipation that they would have a survey done and find out whether any works were needed, and they would confirm their eligibility by confirming the materials and confirming the height. Those under 18 metres are probably in a slightly worse position, that there's still no clarity on potential funding there. Mm-hmm. So there's options of warranties, going back to developers, this kind of thing. But in terms of MHCLG, who are funding the 18 metres and above, there is obviously, Robert Jenrick has mentioned previously that there is going to be leaseholder loans available, capped at a maximum £50 per month.
Yeah, I heard that.
But we're not quite sure how that's going to look for the leaseholder. Mm-hmm. It may be a number of things. It might be a last resort where people can't afford it and they need to make a payment. It could look in any number of situations. At the moment, we would be telling leaseholders, if you're under 18 metres and you have defects, we're awaiting confirmation on the funding. Mm-hmm. So that there is a route to compliance, but at the moment we don't have that information in terms of costs. If you've got a building that is particularly unsafe, and you've got interim measures. Very rare you would have a wake-in watch or anything like that under 18 metres, but if you've been told to have additional fire alarms or anything along those lines, that's where the costs are beginning to spiral, and time is of the essence. But we're very limited in being able to remediate those buildings without knowledge of where they're funding. The only course we would have would be to bill out to the leaseholders.
Got you.
And obviously, the situation that we find ourselves in, if we were to bill out to leaseholders and funding comes down the line, that's great news. But if you're to bill out, you then need to actually recover those costs to be able to get the project off the ground.
Yeah.
And that again is where things are stalling.
Yeah.
So the takeaway from this week's announcement is that if you haven't had a survey and the fire risk assessor hasn't noted any cladding on your building, there's no requirement for EWS1, and therefore the lender should be making their own commercial decision based on that.
Yeah.
They may ask for additional documentation, but the whole request for the prescribed format EWS1 as we know it goes away from this week.
Yeah, I'm going to say typically within a sales transaction, ultimately it starts with a mortgage application which is then submitted. Historically, it go to survey, and then obviously surveyor would attend the property, put his assessment on value and situation there, and then obviously go to mortgage offer, and then it's up to the solicitors through inquiries, raising management packs, etc., for the documentation in regards to the building. I think what we found recently is that we don't even get it off the ground from mortgage offer stage, mortgage application stage, because it goes straight to do you have an EWS1, and whatever that outcome of that EWS1 determines whether that property can be sold really. So I think from our point of view, from a sales upfront position, if the requirement of an EWS1 isn't initially the first point that's required before mortgage, then I think it will elevate or alleviate some of the pressure on the market without a doubt. I think where some of the challenges may lay is just in terms of the legal bit, where we're working through the inquiries and what Section 20 notices are going to be, specifically relating to the works that you've just discussed, because that can obviously have an impact on somebody's decision or affordability and whether they can actually physically afford to buy the property if the costs are pending. The way that I would probably approach that to my clients really would be advising them that it may just be part of a negotiation process. So if there are works that are required at a building and we know them because we've done the assessments, we would try and obviously look to see whether that can be either a 50-50 split or a negotiation between the seller and the buyer, and that may help with that sort of Section 20 notice and work that's there. In your opinion, James, I know it's a difficult one to offer, but do you feel that the announcement by the government is a step in the right direction to not only help in your role, but also the overall market in the apartments?
Yeah, I think certainly it eases the pressure, certainly on those who found themselves trapped where there are no major defects. So you almost find yourself in an argument of, we're confirming that there's no cladding on this building, our risk assessment has been carried out, but the lender is still asking for an EWS1. So where that falls away, that's great news for those. Yeah. Those are the cases that we would typically be advising the brokers, no EWS1 should be requested based on the RICS previous guidance, which was a number of things. So there was cladding less than 20%, below 4 stories, various other cases and scenarios, and that had some grey areas. So we have some buildings where we had pushed back and said an EWS1 request isn't appropriate here. In the background, we're still establishing what the wall systems are made up of and confirming everything is safe. Yeah. But those ones should fall away, which is, as I mentioned earlier, is kind of the almost frivolous request for EWS1, where it's quite obvious to anybody that there is no requirement for EWS1 there. So that's great news for those. With EWS1 as a whole, we're still not quite out of the woods, and it almost flies in the face of the Building Safety Act that came in. So the duty holder, as I mentioned, now has a requirement to assess attachments, so balconies, the external wall systems, spandrel panels, any of those things that we find on a building, we still need to be establishing that they're safe. Yeah. And what we don't want to do is kind of give a false hope that, okay, EWS1 is now scrapped, therefore your building is safe, because as we've mentioned, the EWS1 has not ever been and was not a fire safety certificate. It was purely for valuation. So there's a little bit of confusion created by the announcement. I imagine a lot of people who are in buildings awaiting EWS1 are probably thinking, great news, we can now sell, we've unlocked the market. But it doesn't take away that requirement for us as managing agents, certainly on the estate management side, to be able to confirm and carry out our duties to make sure that the building is safe.
Yeah, I think that's a really valid point, is that whilst the announcement is, almost a relief to the mass market, especially for apartments and especially for front end sales, I think actually the reality is what actually implications are still legal requirement as an estate management company, that we need to obviously make sure those buildings are still safe and obviously compliant to the appropriate standards. I think that for me is a certainly takeaway point from this, is that whilst the government have stepped up, put in place some, I suppose, soundboarding with the UK financing and making sure that there's lenders on board that can actually process a sale through and give people the opportunity to sell their home, there's still a lot of work that's to go on to ensure those buildings are compliant and they're not going to have any further issues in the future. For me personally, one of the biggest challenges we've always had is actually identifying what buildings are compliant in terms of the EWS1 rating. Typically we'd be naming at A1s, A2s, B1. I think where we've always fell short of the A3 ratings and the B2 ratings, and it's almost been with a heavy heart when you're speaking to a client that's got a property and full well it's a B2 rating, and you've got to give them the news that unfortunately we're unable to sell the property at this moment in time. Do you feel that if a building has had the B2 rating, but it does sit under the 18 metres, and do you feel that that's based on what the announcement is that the lender will take a mitigated risk based on the evidence that's been provided by yourselves in terms of the reports that you've put together and the infrastructure you're going through?
Yeah, I think that the B2 rating under 18 metres is almost your worst case scenario for a leaseholder.
Yeah.
There's no present funding, no clarity on the funding at the moment, but there is a requirement for some level of remediation. Depending entirely on your building, that could be something as simple as the balcony timbers need to come out and be replaced with non-combustibles, right the way up to the entire building might be clad with combustible insulation.
Yeah.
Centric have been pretty proactive in that instance, that we had our surveys carried out on most buildings, particularly where we thought we might have a case for the Building Safety Fund, so those just under 18 metres. But like you say, that those who are kind of trapped in that scenario, there is a little light at the end of the tunnel, because we anticipate some funding capped at £50 a month. But that, like you said, with solicitors' negotiations would be based on the cost that we acquire. And that's where we find ourselves at the moment with a lot of these. We've had surveys, we know that there are defects, EWS1 now is scrapped, but those defects remain outstanding, and that will be dealt with our regular management pack. We're just in limbo at the moment of how much is that likely to cost? Do we need to have an initial outlay to acquire those costs? And the likelihood is that goes through the service charge. And then if funding comes along, potentially retrospective to cover your survey costs, potentially not. And that's where the difficulties lie at the moment. If we take an example that we have a B2 rating on a building under 18 metres and we've already engaged contractors, it's as simple as the incoming buyer and the lender are just notified there's a major works project in the pipeline, and here's how much you're likely to be liable for. But we're at that stage with maybe 2 or 3, but there are probably a few more to come down the line, and they're going to have that little bit longer to wait to get those costs established before lenders will take a look at it.
I think it's certainly a fair comment, and from personal experience, I've had transactions of property where the rating is passable, if you like, or at least we understand the rating, the cost implicated in the remedial works, and to refer to a particular case that I've been working with, there were remedial costs of around £16,500. We were aware of that, and obviously it was in the lock of EWS1, so they were on a B2 rating. The only way that we could in effect service that client but explain to him the situation is that we're going to have to reduce that value of that property by that much, but also offer an incentive to the buyer in terms of further reduction, because it's not only a mitigated risk of the bill of £16,500, but also the understanding of they're going to take a capital risk potentially where they may not have the same capital growth on their value, but based on the works that are there. So there are lots of things that I think front-end sales and letting or front-end sales are working with clients But I think for me, the advice to a lot of people is just be in touch with your property managers and understand, the stress factors and what the likely timelines are. I think the biggest things is people expect an EWS1 to be, available immediately, and actually what they don't realise is they cost an awful lot of money. There's a lot of things that go behind the scenes to get those in place. A lot of contractors going out to tender, getting pricing, etc., before we can even establish that. So I think that's where the hold up in our marketplace has been, is actually understanding what that timeline is. When it first hit the scene, nobody really knew, and we just expected you guys to have the answers immediately. But obviously we're aware of the government have tried to step in, and I think with this new legislation change, it will hopefully give us an opportunity where we can at least start the process going and moving forward. We've had some really good wins recently in terms of buildings that have had government grants, haven't we?
We have,
I think we were one of the first in the city, is that right?
So we've had, we've gone through the whole process with MHCLG on a number of sites, both with GLA down in London and with Homes England for England and the North. So we've had a couple of projects that we've gone right through the process, pre-tender support, then the submission of the stage 2 and being awarded that grant, and we've actually got start on site dates now. So we can't discuss really the particulars of those cases, but we've saved leaseholders, albeit through taxpayers' money, but by going through this process and getting them into that application process early, they're now going to save on the interim measures, because we'll be able to remediate faster. So the wake and watch costs won't be ongoing, and we've got one job that's complete. We're just awaiting new EWS1, and we've got another which is in the region of £6 million worth of work. Which is, they've actually started on site now, and they've had the grant from the Building Safety Fund. So those ones will progress. There's an opportunity in the intervention that came this week from Robert Jenerick, that buildings who didn't register in July 20 will or may have an opportunity in the autumn to register. As you know, we had originally 3.5 billion, had topped up to 5 billion. From figures that were released a couple of weeks ago, I think something in the region of between 500 and 600 million has been allocated. So there's still a big chunk of that funding available, and that's the reason that they're reopening that in autumn for those that didn't maybe confirm eligibility at the time.
Yeah, that's good.
So there's hope in that sense. The other one, just to touch on your point about the delays to EWS1 and the timelines, now that EWS1 falls away, the fire engineers, if we take a look at their workload, we're talking potentially 11,000 buildings in the country with maybe 200 engineers that are qualified to sign them off, and a June deadline for the Building Safety Fund, which has now passed. So that when we take away these smaller blocks that don't need an EWS1, all of a sudden the kind of market is opened up. So your survey lead times are going to come right down, because the availability of engineers comes back, because they're not spending time on these sites carrying out surveys that they don't
unnecessarily. Absolutely. And obviously one of the other things that I've tried to convey across to my clients from the front end point of view is what that timeline has looked like, and we've kind of in one sense had our finger in the air trying to guess what that timeline will look like, and we've said typically 12 months would be where I would pitch it. Do you think that's a time that's going to be sped up now for buildings that are above 80 metres because of the pressure off the buildings that are under 80 metres? Yeah,
so there's two aspects to it. So the surveying of the external wall system itself, those that have some combustibles, but then need a fire engineer to review the building holistically to see whether or not it's a B1 rating. Where you've got an A1, relatively straightforward, there's no combustibles at all. Where we've got these that they end up being a B2 because something needs to change, those are the ones where the contractors will go out and carry out the intrusive work. They'll have the information of what they've found, but then we're awaiting a fire engineer to review that. And as we've mentioned, the number of inquiries to try and meet that June deadline to get something submitted to the Building Safety Fund over 18 metres at least had a huge knock-on effect. So we're looking at lead times of kind of anything from 2 to 3 months just to get the report back. And that's 2 to 3 months from being on site and drilling and doing the invasive.
Yeah.
Then you've got the aspect of how do we fund this when we do have remedials, and how long is the project going to take? So a couple of examples, we submitted for major projects on 2 buildings. The requirements of the Building Safety Fund was submit costs by June. So we did that. The projects themselves are still between 40 and 52 weeks.
Wow.
So we anticipate another 12 months before those are signed off, and that's just the construction phase.
Yeah.
So, you know, some of these buildings we registered in July of 2020, and we're now starting on site. So you've had 12 months in some cases with Waking Watch costs and other interim measures. And the government have stepped in, you know, they put the Waking Watch Relief Fund in. Some people didn't benefit from that. They'd already paid Waking Watch costs, and then the alarm came along. And in hindsight, there's some decisions there that, you know, perhaps when you realise how much the Waking Watch, how long it might run on for, it may have been more cost effective to put a fire alarm in straight away.
Yeah.
But we're bound by the terms of leases. You know, we need to consult before we can charge certain levels of expenditure, and we need to get those funds in. So in some cases, in order to keep you safe, a Waking Watch has been required.
Yeah.
And you know, that's out of our hands. That's the requirement to keep you safe.
Yeah.
It's unfortunate that leaseholders have been hit with those bills, but we've been working in the background to try and get those buildings remediated as quickly as possible and put a stop to those ongoing costs.
Yeah, I think that's really interesting to know. I mean, obviously I'm lucky because I have you guys here to be able to sound off. But I think those agencies and those clients that are in predicaments where they don't understand the process of what's going on behind the scenes, it almost feels like, well, 12 months seems ridiculous because, you know, it's just a report, you know. But obviously there are so much things that are going over to you guys that you're having to mitigate, work through, discuss, consult before you can even get to a position of even actually going out to do the work. So that 12-month, you know, it sounds like you're working very hard to deliver those measurables.
There's a fine balance, obviously, from my role in particular in terms of head of compliance for the estate management side. Number one, as always, is the health and safety of the occupants.
Yeah.
And then secondary to that, but also, you know, at the same kind of priority to us, is our duty of care to leaseholders to make sure that we're limiting costs where possible, and that we're doing all we can to try and move these things forward.
Yeah.
And I think that's some of the biggest frustrations that we've had is, you know, we've tried to contest some reports.
Yeah.
We've had a report perhaps we weren't happy with when we reviewed it, and rather than give bad news to leaseholders, we've challenged those reports, and in some cases they've been amended on receipt of additional documents from the developer, those kind of things, and all of a sudden then you go from a B2 to a B1.
Yeah, we've had a few recategorisations actually. So it's quite interesting.
When that happens, that's great news for the leaseholders.
Yeah.
And what, you know, they have to appreciate that we could deliver the bad news and then follow it up. What we're trying to do is be thorough and make sure that the news we deliver to you is accurate and current.
Absolutely.
So, you know, there is a longer wait there, but if there's a potential benefit to you that you might be a B1 rather than a 2, I'm sure most leaseholders would agree that give us that time to carry out the internal review and get everything we need in order.
Fantastic. Well, James, I must admit, you know, having worked for the last 18 plus months in this marketplace, feeling the frustrations on the ground from customers, from ourselves as agents, yourselves as you know, property managers and estate managers, I do feel that there's going to be some elevation of, you know, pressure relief from the market. I feel like we're not out the woods though from listening to you today, and I think it's really important, as I say, as always, to be, you know, in communication with your agent and ensure that they're able to explain the current circumstances. But it does sound like with the under 80 metres, no EWS1 requirement, that will help with the stuck market that we've had, a bottleneck of properties that are unable to be sold because of the waiting for the EWS1s that aren't necessarily required. So that's a great response for front-end sales. I think it will hopefully start seeing more properties come to the market and give us a better opportunity to offer to our customers multiple choices of property. I think where we're not out of the woods is there's still quite a lot of risk assessments that have been done, health and safety measures that we need to put in place. And as always, as we say, it's about negotiating those terms and understanding what the ins and outs of it is. Yeah. So from my point of view as an agent, we are meant to be transparent through the consumer protection regulation. So if we're aware of any pending works or Section 20s, we will need to obviously disclose that. Yeah. And obviously that will be part and parcel of what we will be delivering to our customers on a day-to-day basis. For me personally, it's been really interesting listening to all the things that you go through. It's very technical, clearly, and it's certainly something that you need to be a specialist in. So I would certainly be handing a lot of things back over to you if I have any queries or questions. I suppose in terms of an open forum, is there a place or a part that people can actually go to see this type of information, or is it just closed behind the scenes? How do people get to know more about it?
So typically the guidance is published by the government and kind of freely available online. If you live in a building managed by Centric and you're affected by any of these issues, you'll be getting postings out on our portal, updates on your specific, you'll have bespoke communications advising what the actual situation and scenario is with your own building, but we're also issuing general communications to keep people abreast of the situation. It's important to note that the original AM14 guidance and the January 2020 guidance note, they were drafted and approved on the recommendation of the same expert panel that has given us this week's announcement. Okay. So it is an ever-evolving situation. So like you say, we're not out of the woods. Things could change down the line, but the immediate sort of takeaway is that you do not require an EWS1 under 18 metres at the moment. And if you, certainly from a Centric point of view, if you live in a building or you have a lease on a building that we manage, if you contact the building and estate management team, we'll be working closely with our pre-contract inquiries team to make sure that all the information is relevant and up to date, and we can give you an overview on your building of exactly where you stand if you've got any inquiries.
Fantastic. Okay. Well, I think we'll end it there really in terms of the information we want to deliver. As always, we're trying to obviously do everything we can to ensure that the information we provide to our customers is accurate and current. If anybody out there does need any advice in terms of cladding or any EWS1 related information, do give us a call and we'll be more than happy to help and assist you where possible. As I say, let's take away the good and positive from this. There's still a lot of work to be done, but I do feel the housing market in apartments will open up now, and we'll see some more sales coming to the Birmingham market. So thanks ever so much for joining me today, and the information has been fantastic.
Thanks.